Hello, YouTube. Has the S&P gone up too much, too fast, and now we're going to get a big fat crash? This is important because 1 in 2 people believe we're going to close the year out at 3,500. That implies a 15% drop from where we are right now. So they think that the lows we got to during the SVB crisis at about 380, that's not good enough. We are going even lower. And if we're going to go down, there are a couple of signs we can now look at. So since you guys loved the bear market video yesterday, it's our best performing video in about 2 weeks. It just tells me that people really want to hear about this. When is crash, right? When crash? Well, if crash now, let's make sure we understand what could cause that. Netflix came out. We have some earnings to go through. But the story is basically what we talked about yesterday. Everyone's looking one way. People don't believe the rally. We continue to climb the wall of worry. People continue to be worried, and not very many people are ready for the upside. So they're telling themselves, "Hey, well, if I think we're going to be at 3,500 at the end of the year, I'm a buyer with both hands down there. But over here at 41, whatever, no thanks." Netflix sinks after earnings report. And there's something we can actually glean from here. So they did actually beat earnings. It's by 2 cents. So we have to understand that what we went through on the weekend talking about the earnings beats, that is today. The market is a future discount mechanism, which means that it looks forward to the future to understand what we're going to be doing. So when we had Netflix report earnings all the way back here, they're like, oh my God, Netflix is over. No one wants to Netflix and chill anymore. And then earnings start beating. And again, these are all beats here. Looking back to quite some time, we just go back to October of 2021. They're all beats except for the last one. And the last one actually made us go higher. So it's not like, oh, if earnings are a beat, then we go up. Right now, Netflix is down by about 4%, and after hours was down by as much as about 10. But they did announce a share buyback. And I think a share buyback actually means one of two things for me. And I'm going to ask you for a huge favor, please and thank you. If you could, consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. We will update you all week on this story. So even though we're expecting earnings beats, what the market really wants to know is, are you guiding higher or lower for next year, next quarter? And for Netflix specifically, they're going to be doing their password sharing lockdown into America next quarter, which means starting basically right now. Second thing I would note is that revenue came in basically in line. So all that means is that a growth company, which is what Netflix is, it's supposed to grow. Growth companies are supposed to grow. They're not supposed to pay dividends. They're not supposed to do share buybacks because they are able to better spend the money. That's why they're often unprofitable. They can spend to grow. And when Netflix announces a share buyback, that is going to boost the share price. I did not get the exact number they're repurchasing before I hit record, but they're buying back some stock. So according to Netflix, who is the king of streaming, they're saying spending on more streaming or betting for tomorrow, we're not so sure that's the best investment. We think our stock at 300 whatever and a current PE of about 33, that's the best use of our money. This is not really high when we look at a company like Tesla, but it's still pretty high at 33. So they're purchasing their stock at 30s, which 300s, which means that they think that there's value here. They think the share price is going to go back up, but it's not really a growth company anymore. That's the problem. That's why I think those numbers kind of gave it a meh reaction. Down about 10, share buyback, recoups about half the losses, but this chart's got some work to do. It took two nasty earnings releases here. Bill Ackman bought in, then he dumped it, and now it's taken a long time for us to carve out this bottom action here. So are we actually going to enter the pocket on Netflix? And remember, Netflix was like a really big predictor of the earnings cycle last year. Sorry, last report. It boomed higher, right? Initially went up, dragged the market higher. It didn't go a whole bunch of anywhere, but the Nasdaq's like, hey, well, up and then up more, and then up more, and then up more, and then more. So what I think is happening here to Netflix, and I'm spending a few minutes on this one because I think it's important for us to understand the landscape. And we just look here to, okay, well, we got like these massive levels of demand and supply here. That's the big volume. Goes back to our gap. So after earnings, we managed to get over the gap a little bit. Then we come back down, fall back inside our lower one here. And now we're just unsure. Not sure what this pattern is. Is it a cup and handle? Is it a inverse head and shoulders? Is it just a descending, descending triangle? I don't know. Like, we're going to have to see some time for this to play out here. But if we're going to start going down, like I would expect, again, keyword being expect, it's going to have continuation tomorrow. We're not quite seeing it yet, But here we go. Here's the bulldog out here. Bullard, right? Exclusive. Fed's Bullard discounts recession talks, favors more rate hikes. He's like, hey, what recession? He's like, when recession? Nope, not happening here. Fear and greed is still into greed. And he's like, hey, I want to break something. That's basically what I heard Bullard said. We should keep raising until something breaks. Not it's breaking. No, it's broken. We'll stop when it's broken. That's what I heard from him. And we had a lot of Fed speakers. We had Bostic, we had Bowman, blah, 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 blah. Market closed up by 0.07%. NASDAQ eked out a gain, a little bit red in after hours. So what does this all mean? I'll tell you what it means because today, and again, link in the description if you want to trade with me, Justin from YouTube for 14 free days. Just go to the website that's listed here. It's in the top comment and also in the description. But what I mentioned this morning is, let me see if I can actually pull the note out because I think this might actually just be better than me trying to over-explain it. Because I think a lot of people might not know what they're actually missing by not being in the group. But anyways, here you go. It's 14 free days. So if you think there's going to be a little bit of volatility in the next 14 days, why not come and join for free? Because this is what you get. So what we say on YouTube is not always what we do. In the morning, things change. So this morning, I was like, okay, well, S&P is right around the bullish area that I called out for this week at 416, which means we're opening at resistance. Okay, so over 416 is better than under 416 at this point. And we were looking for over 322. And the note here was, are gap up still for selling? Well, they are. So we're right around resistance. We were gapping up. So how did we act on that gap? Well, we opened, propped, gap filled the weekly. We gap filled the daily. If you don't understand what that means, again, I can't go through tick by tick. Encourage you to go to the link. Join us for 14 free days for all the context. I have notes every single day. Where we go from here is going to be very telling. I'm watching for 15-minute and 1 hour higher lows and higher highs versus lower highs and lower lows. So for a large part of the day, we actually formed higher lows. And let me look at the last note here finally. This was my final reminder 1 hour after the market opened up at 7:30 Pacific. I said S&P and QQQ printing a daily lower low is a yellow flag, and having a closing price below the lower low, that's a red flag. So did we get a yellow flag or a red flag yet? Because we're still pointing up, and the answer is no. We have another higher high, another higher low. And at the low of the day, all we really managed to do was to test the area that I called out yesterday. The area that I called out was we were looking at 41192. We were looking at 41509. Well, that's what we did this morning. So if we just do something really simple here, we're going to take a couple of lines so you can just like really understand what happened. So if we understand where we're currently resting, it's between two key weekly areas. We now zoom into the 15-minute chart, and let's look and see what happened here. Okay, so there was the gap and prop. There's the higher high. So they tried to rip it up higher. They failed to hold it. Ultimately comes a bearish 15-minute candle, low, lower, low, lower, low. Gap gets filled. Attempt to gap a bounce off of the gap fill here, dead cat bounce. It gets faded. That's why we have an upper wick here. Comes back down, levels off. And these lows right here are just basically backtesting the top from our base yesterday. So we try to bounce off last week's high at 41509. Not quite good enough. We come down for a gap fill, try to bounce off that. Not quite good enough. And then we have to come all the way down to our base from yesterday. That's pretty much where we leveled off at about 413. So that's the story. And then after we formed this period right here, low, higher, low, higher, low, start getting higher. Then we flatten out above the resistance. Not much else really happened for the rest of the day. If you look at a 1 hour chart, we can kind of see the same thing here where low, lower, low, lower, low. Then we get a higher high. Then we just go sideways. So until the story changes, like let's keep it like really simple. Below 411 or over 416. That's like what I'm looking for. But I'm talking about that because the only way that we're going to flip bearish is that we have to first of all stop going up. So there's a few things I'll tell you I would need to see, not want, but need to see for us to start a 15% drop. If we can't go down 1 or 5%, we're not going to go down 15. So how does that start? Well, it starts by us not birthing the bull. That would be the first check. Second check is that we don't form higher highs. Well, we already got one this week, so that doesn't really help the bear case. Lower low, don't quite have it yet. We'd have to get below 405. And then I need to see one more candle to show it's not a single, it's not one candle, it's a pattern, which would mean I need to see 2 lower lows and 2 lower highs, which means we're actually breaking below like 400. That's what I would probably need to see. And then we got to test the 50 weekly, that strong support. So it's like not easy to top fish right now. If we use our stop of about 418 to 420, yeah, you can put shorts on. There's a difference between protection, which is insurance, versus going naked short as well. So I don't think I want to go too much further because I think I gave you a lot of content. Encourage you to play back or to watch the weekend video now laid out. And again, if you want to join us for that 14 free days, we would love to have you. If not, I look forward to seeing you tomorrow. Thank you again.